Hi, this is Bruce Parker, and we're here with a simple math question for you, which is a little tough, but that's okay. We'll get through them. I hope that you'll be able to use these math questions as I publish them. Try to do a couple a week. So this is a special one about interest, and we have to remember that interest on loans is paid in arrears. When does that become important? It becomes important quite often when we're assuming a loan because the seller of the house will have lived in the house for part of the month, but he's not paying the interest on the money on the loan until the end of the month. So if he closes before the end of the month, we have to make an adjustment. So here's our question. A buyer is purchasing a home on July 20th and is assuming the seller's existing mortgage with a balance of $240,000 at an interest rate of 6%. The lender collects interest in arrears, and the seller has already made July 1st mortgage payment, which covered interest through June 30th. Now remember, we're closing on July 20th. At closing, who receives the interest adjustment and for how much? And to make things easier, the test normally uses a 360-day year and assumes 30 days in July. So which of the following is correct? Buyer is credited with $760 and seller is credited with $760. B, buyer is credited with $760 and seller is debited $760. C, buyer is debited $800 and seller is credited $800. And D, buyer is debited $440 and seller is credited $440. So take out your pen, stop this video for right now, try to do the math, and then give it a minute, and then move on to the answer. And the answer is buyer is credited $760 and the seller is debited $760. Now, again, since interest is paid in arrears and we're closing on July 20th, remember that the seller has lived in the house from July 1st to July 20th without paying the interest fees because interest is collected at the end of the month. At the end of the month, the buyer will own the house and will have to pay the interest fees for the entire month. But the buyer has only lived in the house from July 21st till July 30th. And so we have buyer is credited $760 and seller is debited $760. Not so hard when you think about it. Step one, daily interest is the first thing we have to calculate. We have a $240,000 loan. We multiply that by 6%. That's the interest rate. And then divide it by 360 days in the year. We find out that the interest payment per day is $40 per day. And the seller owes interest from July 1st to July 19th. That's $19 at $40 a day. So the total is $760. And here's the explanation. Because the seller's July payment has already covered the interest owed through June, the seller will not receive any reimbursement for any period after July 1st unless it is adjusted at closing, since the buyer will own the property beginning on July 20th and is assuming the loan. The seller must reimburse the buyer for 19 days of accrued interest. Again, think that the seller lived in the house for 19 days in July without paying interest on the loan. So if you've liked this little video, please like and subscribe. It's very important. Follow for more, and we'll either see you in class or we'll see you on the videos. Thank you very much. And again, I hope you enjoyed this.